This is the first time I believe we've done something specifically just on the subject of family offices. We're delighted to be doing this. And we are today going to be addressing how the family offices in the developing emerging markets, how they may differ or not, as the case may be, with family office decision-making from the US or from Europe or from other parts of the world. We are absolutely delighted to have Leah Yu, who is from the Miro family office. She's normally based in London, but today she's in Singapore. Welcome, Leah. We're delighted to have you. And we have Anmol Goel, who is the CEO and managing partner of GACs family office. He is also normally based in the UK, but dashing off on a trip to the US, I believe, later on this week. And Lawin Chandra, the CEO of aiRaiz. Welcome, everybody. And for those of you who don't know me, my name is Simon Osborn. I am the CEO of IFI Global, which is a research and media house based in the City of London. So welcome. We're delighted you can join us. Without further ado, let's just get straight into it. I think what we'd like to do is ask everyone to make a short introduction of themselves. And maybe we should do ladies first. So Leah, over to you. If you could give us a little bit of background of what you do and so on.
Hi, everyone. Delighted to be here. So my name is Leah Yu. I work with Miro family office. This family office consists of Miro brothers. However, the siblings will soon receive some distribution and the family office will lose some assets. Well, it happens in families, in single family offices. And the family is experienced in equity and fixed income, both public and private. We are now at the strategic move into more VCs, more PEs, more direct investment. My background is working as a consultant, have my own venture before. It was foreign direct investment advisory.
Thank you very much. Anmol, over to you.
Thank you very much, gents and ladies and gents. I really appreciate you having me today. And hi, everyone listening in. My name is Anmol, and I'm the CEO and managing partner of GACs Multifamily Office. So we're a family office of 3 main families, and underneath that, a coalition of another 28 families who co-invest, raise capital, and deploy capital across the world, primarily focusing on 3 main geographies of UK, US, and India. As a multi-family office, we have a buy side and a sell side. So on the sell side, we operate almost like an investment bank, doing advisory, doing capital raises, doing policies for governments and think tanks. And on the buy side, we have a few investment vehicles, which we tend to invest out of, from early stage venture all the way to liquid public markets. We have a venture studio, we have a VC fund, we have a private credit arm, and as well as an operational hedge fund. So, and my background particularly itself, so I started as a founder first, built my first company when I was 17, second at 19, sold it by the time I was 20, and then got into corporate, was ex JP Morgan and Marsh McLennan. And then started writing checks whilst I was there because I realized corporate wasn't for me. So I wrote my first angel check at 22 and started advising families by the time I was 23, especially in the world of AI. Was one of the earlier investors in OpenAI myself. As things grew from one to another, decided to pool in the resources of my family and other families that I was working with into this multi-family office structure.
Thank you very much. And Lawin.
Sure. Thank you for having me again, Simon. I'm Lawin Chandra, the CEO and co-founder of aiRaiz. We are raising capital for emerging asset managers, particularly from single and multi-family offices globally. And I'm running this company out of London at the moment. And we also have an office in San Francisco. We're expanding continuously. We are the company with the largest investor base or institutional investor base with 67,000 LPs. And we have built AIs around it, machine learning algorithms with 150 data points per LP. That accumulates to around 10.5 million data points, which our machine learning algorithm is calculating. And I'm also helping single family offices to find investment opportunities globally out of Silicon Valley, UK ecosystem, and also the German ecosystem.
Again, thank you as well, Lawin, for that. So I think the first topic we'd like to talk about today is what are your investment criteria that you tend to focus on when you're evaluating opportunities. And I repeat what I said at the beginning, where the purpose and part of the purpose of today's discussion is to see what may be similar and different from the way you guys do it from the emerging markets, developing parts of the world, with the way traditional family offices from the States or Europe might do it. What are the similarities and difference? So I guess to change the order a bit, Arnold, do you want to go first at this time?
Absolutely. So I think, evaluating opportunities, it depends on which type of opportunities we're looking at. If we talk a bit more on the venture side, right, where the early stage bets are being placed, it's a lot more relationship based. And in emerging markets, and I'm sure Leah, maybe you can agree to this as well, there's a lot more impersonal activity, right? Family offices, especially want to meet the founder, want to meet the team, and want to see what's going on behind the scenes and want to nurture that relationship. So when we talk about earlier investments, whether that's, investing in VCs or directly into companies, we want to see and develop this personable ability. I mean, and the precursor to it obviously is we already expect, we're taking an assumption that we have done the technical due diligence, right? We have our team of analysts and associates who will make sure the startup has the right traction. They have gone through the right go-to-market channels. They know, their market structure. That's a prerequisite. If you don't have that, I mean, family offices won't even answer your calls, or they won't even, agree to meet to you. So giving the assumption that that prerequisite already ticks off, then it's very much backing the jockey, not the horse, right? We see relationship is a massive, massive way. And then evaluating opportunities on sort of the later side, on the hedge fund side, we try and look at where where is somewhere we can have an edge, right? We are big on strategic deployments. We are not, I can speak for our structure, we are not sleeper investors. We don't want to put money in and forget about it kind of thing. We like to look at how we can make 1 + 1 11, right? So in the Indian geography, we are very well connected. We have access to a lot of ultra HNIs, a lot of the guys who have done super, super well and have their own family office structures. And we like to build out of that. And an additional thing, investing sort of on the emerging continent side is the concept of family office itself is a relatively newer concept in the Asian subcontinent. I mean, unless, you're talking about the top 1% of the families, it's more of a family holding than a family office, right? Because typically for the last 200, 150 years, as the families would do well, make profits, they would want to reinvest into their own company. So another additional criteria would be, aside from, diversification of asset classes, which is typically what families do, is if we're investing in something, how can that add value to our existing structure, right? So we have been turning our entity almost like a PE structure, where we realized, okay, tax, for example, is a really big thing. So we in-house that. We realized, again, as we started to invest into tech companies, development teams are super, super important. So we acquired a development company, right? The next part of it, with the wave of social media, AI, and the boom in attention as a currency, we realized marketing and sales is super important. So we acquired that company, right? And so on and so forth. So we're almost sort of trying to build an internal vehicle which adds value to our portfolio companies and our existing companies. And that's our way of going about, investments when we look at things.
Thank you. And how about you, Leah? How would you describe the Miro family office approach to what we're talking about, evaluating opportunities that come along?
Yeah, in fact, I echo what Anmol said. It's, the governance and the founder, the team, the relationship is extremely important. And also we look at the transparency and the integrity of the company and its management team. And also the alignment of our current interest. For example, our family office has also BPO operated in the Philippines. So if there are also some data center or a call center, we would look more closely so that it adds value or scales of economy into our current business. And then also when we look at the projects or the investment, we also look at the proven track record. We work with GPs or other fund managers to see, if they have already very, very solid record. And then apart from that, then the business is, if it's compatible to our current portfolio, and also the scalability and not being duplicated easily. Those are the things that we would like to look. And then cash flow generation, if it is on the profitability side, quite sound. The relevance to our local market, for example, Southeast Asia market, or even the China market. And apart from that, we would also look at the valuation. The valuation meaning that we seek a very significant margin of the safety, meaning when you do the valuation, maybe, we are really looking to details to have it lower, because most of the evaluation has to be re-looked after. And then we need to have some visibility of the exit. That's about it.
Thank you, Anmol and Leah. You mentioned quite a lot direct deal investment strategies. How do you see fund investments, and what are the investment criteria for those? Because there you are just investing into kind of like a blind pool, and you're just trusting the asset manager or the general partner with your capital. How do you do the due diligence on them?
Is that directed towards me or Leah?
Both of you.
I'm happy to start, Leah.
Okay.
So for us, we tend to rarely do LP positions because we like to in-house the vehicle. So when we realized there was an opportunity on the early stage, we built out a venture studio after acquiring the sales company and the development company, and realizing we can utilize their balance sheet and assets to deploy. When we found the gap in the venture market, we again, created the VC fund, and we're both LPs and GPs into that. Same with the hedge fund, we're managing just shy of $1 billion, and about 20% is our own capital, right? So we are always LP GPs into the fund. So we like to be very hands-on. And we've just done another LP investment into a fund, which is a deep tech fund focusing on investing in India or in Europe and US, where the products could be expanded into the India market or built by the Indian diaspora founders. And the reason we've LP'd that vehicle is because we feel like we can in-house that vehicle, or the second version of that vehicle, and the operating team of it can work with us, right? So when they go for like a fund 2, right, and our vehicle is going for a fund 3, maybe we can merge that together and go for sort of like a super vehicle, which could be a couple $100 million. So that's sort of the idea. So from our side, even when we are LPing, we're not going to be sleeper LPs. We want part of the GP. We want to see how we can add value and how it fits the structure. And we are currently looking to LP a PE vehicle as well. And again, we will be co-GPs alongside the vehicle. The strategy of the vehicle is pretty much buying out companies with very strong assets and very strong cash flows, where the founders are getting older, and their children or the next generation doesn't want to continue. So we're going to techify that and put it into a portfolio. And again, we have a very strong existing GP. She's been doing that for the last 4 years. And we realized with our network and our, multifamily office resources, we can add a lot of value aside from just cash. What we always say is, whether it's on the direct side or on the fund side, if monetary value is the only value we can add, we'll never be a part of it, right? Because, in the grand scheme of things, we're not the biggest multifamily office. UA is a few billion, but still there's a lot of room to grow. And we like to be opportunistic. We like to be hands-on where we can.
That's very interesting. What about you, Leah?
Yes, okay. In terms of the question, mostly we work with a lot of network of GPs, and then also we would like to divide after the due diligence, after the soundness of the business of the fund, and then we would separate, spread the risk. So we cut funds. Yes.
Just for a second, you froze there. I just want to let you know that. Okay.
I think in order to conclude, track record is quite important. And then the Asian family offices want to be a little bit more hands-on. and want to have access to additional or to those direct deals. So co-investment rights will be very, very important. And I think smart capital could be the keyword here. And that is what the GPs and the underlying company should think about. How do I want to access from Europe or the States, the Indian market? How do I want to access the Chinese market? When they have thoughts like this, I think LP like you guys would be very, very interesting. When I would speak to my colleagues and employees, I would also tell them, okay, if the GP has a partner such as you, Anmol from India, or you, Leah, with heritage out of China, they're approaching additional LPs out of the same region, you could be a reference. So this is where the GPs and underlying startups should take advantage of. If I may, can I go to the next question? And that is towards Leah. So how do US and European and Asian family offices differ in their approach in terms of investment opportunities which they're receiving on a daily basis?
Thank you. Very interesting question. It differs in history, culture, and maturity of the home markets. So taking US family office as an example, it is short-term and high growth oriented, focused more on IRR and aggressive growth, like venture capital, VC technology, and then, the sector involves technology, biotech, and disruptive innovation. Weighted to Silicon Valley style ventures, high risk tolerance, I would say, with relatively entrepreneurship, spirit. In terms of European family offices, it's relatively more long-term capital. It's about capital preservation, focused on that, and the generational wealth. The sectors it covers like luxury goods, industrials, engineering, sustainable, and impact investment. The value heritage is important, and European family office is are more cautious, and there are a very, very big culture of deep due diligence and privacy. As far as Asian family offices are concerned, two keywords: pragmatic and dynamic. Hands-on, for example, for sure. And then there is a blend of long-term with opportunistic tactical bets. So heavily influenced by the first generation wealth creator, the founders, most likely. And then highly diversified, like real estate, technology, healthcare, supply chain, logistics, domestic, and there is also domestic consumer consumption. The Asian family offices are more agile and network oriented, very, very, very strong on the Chinese word is called 关系, which is meaning relationship. Relationship should be built mutually in order to build the business afterwards.
Yeah, guanxi is existing everywhere in the world, right? Relationships are important in the States, relationships are important in Europe, relationships are important in East and South Asia. How can someone from outside penetrate maybe a closed guanxi relationship environment?
Yeah, I think, if you are a scale up or a startup or a fund manager looking to penetrate, the subcontinent, I think the biggest thing I will say, and the first thing I will say, is you have to be based here or live here for a period and try and meet people on ground, in person, and shake hands. I think it's starting to change a little bit, where the online meeting stuff is approaching more and more, and deals are being done. But I think if you want to access the bigger players, you want to access the key markets in India, or I think, maybe also in China, you have to be present there. I see too many, go-to-market consultants and specialists on, Asia, never been to Asia, or, barely have spent time in Asia. So, if you want the support from these guys, you have to spend time there. You have to be on the ground. You have to learn the culture and the way it works, right? In India, typically what would happen, you would, schedule sometimes a meeting for 4 p.m. Everyone would show up by 4:30, right? And in a European culture, it's like wow, how could you do that? Right? Because especially in America, especially in New York, right, you'd go there because everything is so, I mean, it's a great structure that works. Like everything is back to back to back, bang, bang, bang. You know, you do your meeting and you're out, and it's very transactional. But India is much more relationship based. You know, then you might, get asked out to go to the shisha lounge, or you might go out in the night, and you might go out to eat. And the meeting, which was meant to be 4 to 5, starts at 4:30, finishes at 7. Right. But after you've built that relationship, that trust is gained, those guys can open all of the doors because in India still it's still very hierarchy based. I would say you really only need to know about 100 to maybe 120 players and you'll know you can open every single door. In order to even penetrate the first one of those guys, you have to be present there. You have to show, why you're doing what you're doing. And I think another sort of thing, and I think both India and China are focusing on this at the same time, is you have to show what's the benefit for the India market, right? Or what's the benefit for the China market? And this reflects in our thesis as well. When we are backing, startups, we're seeing what's the India angle, right? And more families, they want to see that. What's the connection back to the homeland? And how's the value being added there? Especially, a lot of the families who are the top 1% of the families, which I mentioned in the start, they're all politically linked, in both of the subcontinents, which is, again, I would say is also another question you posed to Leah was, the differences. And I think this is another one of those differences. The top families in India and China, they're a lot more politically linked and involved than European and US ones are.
Yeah, that's really, really interesting. So Guangxi is a keyword here. Leah, thank you for that. I personally thought this is very true, but I don't wanted to accept the fact that I cannot penetrate this private investment market. So I just generated quite a lot of AI algorithms to penetrate this market, and it's actually working. So we raise capital from different investors from Europe and the States. We also raise capital for ourselves, but also for our clients. And we also raise capital without in-person meetings. A lot of times people are saying, well, you cannot raise capital if you do not meet that person. We proved them wrong by enabling a GP to raise capital cross-border from a different LP who was in a different country, never heard about them. So I think you just mentioned this, Anmol, but I would like to emphasize this video calling environment, which has been opened up since the pandemic, where every LP said, okay, we are open to have video calls because we are not allowed to meet in person, is actually working. So if GPs and founders need to use this and should not focus too much on traveling around the world just for a meeting or a coffee. First, they have to do the due diligence themselves on the LP to understand, am I a good fit for that LP? And then if that is a yes, they should have a video call, and then they should then meet the LP. But they also have to understand that sometimes you just have to give a small gift from your own country as a goodwill, as a gesture, and not just go there with the mindset of it's a business and I'm going to make a lot of money. Maybe that's not so important, isn't it?
Yeah, no, absolutely. I think, if you're targeting just one LP, probably, and you're sitting in the US, probably not the wisest of idea to fly into Mumbai and then fly back. So I would definitely say spend a bit more time there and have a few more things lined up. But I think, slightly agreeing and disagreeing to your point, I think definitely, the video calling world is making things easier, but it's in comparison, right? So me and you, we have a call now. Once the call ends, the laptop shuts, right? Versus me and you have a conversation in person. Meeting ends, we say, so where are you heading to? How's the wife? Do you want to grab a coffee? Oh, I know a really good joint here to go grab a sandwich, right? And then that makes that informal connection, which is what me and Leah both touched upon, is in our geographies, relationship is bigger than financial statistics. So if you're a GP and Leah's a GP and they're coming to me and you're coming to me online and Leah's meeting me in person, chances are, once our meeting ends, the laptop closes, the conversation is done there. Whereas when mine and Leah's conversation is over, we might say, actually, do you want to go out for food? Or actually, tomorrow I'm heading to this bar and meeting a few other families. Do you want to come with me? Right. Whereas I can't do that, online. So it favors you more. Definitely saying, it can't be done. Utilization of tech is definitely increasing in the subcontinent, massively after COVID. But I would just preface that with a little bit of caveat there.
The other
Yeah.
thing, can I just chip in and say this, and also perhaps move the conversation into a slightly different area as well, is that we notice in terms of what we do as a business, there's LP investing in general is becoming, in a way to support something that Anmol was saying about earlier, much more direct. There's less investment going into blind pool traditional funds of any kind of shape or size. However, the caveat is, and I'd be interested in both your comments, Leah and Anmol, on this. There's only so many hours in the day. There's only so many relationships you can build, even if you go and invest all the time you want to hang out in Mumbai or Shanghai or wherever it may be. There's only so much you can do. You've got to do a lot more work away from the relationship building stuff as well. And if you are going to be as hands-on as you say you are, Amar, and I'm Leah, you kind of are, from what I understand, that you and your family office does. Is it restricting how much you can invest? I guess.
I
To
think
both
you
of
can,
you.
yeah, I think you can always invest more. You can always choose better projects. However, we are ambitious as much as we can, meaning that I'm making peace with that limitation. So as long as the projects come in with the very, very solid referral, with a track record, with good return on investment, and with the compatibility with our own investment philosophy, then these are the projects that we are going to look at. So I'm completely in peace with myself.
Okay.
I think, one of the things we always sort of look to try and do is bring people on board to work with us or work for us who are much smarter than us and they're the subject matter experts. So for example, the venture studio, which was started by me and my partner, we put in a few hundred K. It's a couple million in balance sheet now, and we invest very early, sort of sub 6-7 million even valuation tickets, right? So we put in like 50Ks, 100Ks, 150Ks. We figured out what works, and then we built a team to run it. Right. So me and my partner Nanda's role, or our role, is just, have a call at like 9 a.m. on Monday and a 9 a.m. on a Wednesday or Friday and just figure out the ship isn't burning. And as long as that's not happening, we let it run. Right. And then on that side, the team knows key contacts, right? If they want access to my phone book, which I've got like over 12,000 contacts of, from government officials to royal family to family offices to VCs and so on and so forth. They can just ping me. They can say, "Hey, Anmol, we're due diligence in this thing. It'd be good to get X, Y, and J person on board, right? Can we bring them on a call?" And I'll just connect them straight away. So it's taking my personal exposure or time consumption down, but I have now a team operational who understands the structure of how things operate, and then them to sort of do that. Same on the development tech side, and same on the hedge fund side, right? We have a team of almost 300 now, very strong analysts, very strong market researchers, very strong partners, hedge fund partner, capital raisers, operators, who understand the structure, who understand the economics of what we're trying to do. We are almost then sort of being the face. Obviously, the final decision, the call, the paper that is always signed, the check that always leaves, it needs our approval every single time. But what we're saying is we're not involved in every single step of the way through. We're involved when we need to be, and we brought in someone who's a specialist in the other chain. So then we are able to maximize what we can invest in. And again, there will always be opportunities, which we will miss out, and no one has a crystal ball, right? In the moment, you might think of something and go, I don't know, and then 5 years later, you go, damn, right? And that's happened in the past, that's going to happen now, and that's going to happen in the future. But for me, it's not about the good opportunities which might be missed. My focus is more the opportunities I do invest in, they need to be good, right? And maximizing the effort in growing those and making sure those ones perform well.
That's a good way of putting it. Don't get too obsessed about the fear of missing out kind of stuff, and focus on what you're doing. There's something we talked about in the prep call yesterday, move on to that, which is the whole of what is coming onto your radar screens in terms of categories. What kind of things do you see out there at the moment that look interesting, that if we were doing this 2 or 3 years ago, perhaps weren't there, or where do you think we'll be in those areas in 2 or 3 years' time? And what areas in the investing world, Leah, do you think look particularly interesting to you?
I think, because of the trade, more and more trade or more and more, blocks of trading in the world in this current geopolitical environment, the supply chain resilience is very important, meaning that we need to look at regional hubs, how to support the supply chain technology in order to build these kind of regional hubs so that it can be offsetting the current geopolitical risk. That's one thing. Second is AI applications, AI infrastructure investment. These are the things that we would like to focus more. And then apart from that, the impact environment to a less extent, because it is a little bit far away from our family office focus. I think for some other family offices or some other investment vehicles, that could be interesting. So these are my 2 cents.
What about you, Anmol?
Yeah, I think, Leah touched upon it. I think, half the world is just talking AI now, even, from the, kids to the grandparents, the other day my grandma mentioned if I could chat GTP, well, she calls it chat GTP rather than GPT. She's like, can you do it? And I was like, what? How do you know this? You're in your 80s. So, that just gives us a
Anmol,
essence
she's
of
from India, right? So she's a tech
yeah,
person.
exactly. So, I think definitely the more and more involvement of AI and integration of it into other parts of the journey, right? So AI initially was a little bit hard for everyone to understand of machine learning and how does the large language model actually works. My background was in mathematics, and then I got my certificate of diploma in innovation in Harvard, so I understood that more, and I operated as one of the first 10,000 users of OpenAI, so my understanding of it was quite strong. But now you're seeing basic implications of AI in industries like healthcare, like manufacturing, hospitalities, which are traditionally very slow to adopt a tech, even those utilizing AI to make things better, faster, cheaper. Right. And it's the integration of that more and more and more that we're seeing. And almost every company is now I think in a couple of years' time, you're no longer asked the question that, are you an AI company? It's almost going to be like the early 2000s where, it's like the internet. You don't ask a company or a startup today, hey, are you an internet company or do you use the internet? They're like, well, of course. What kind of dumb question is that? Right. So I think AI is going to become the same sort of thing. So the question would then be, are you an AI first company or are you or are you, is your utilization, for the things that I mentioned, like making the processes quicker, faster, cheaper. So that's definitely one. I think
What
a
about
lot of it,
real estate? Is that not a topic for you guys as well? Prop tech and real estate technology and AI in real estate.
yeah. So I think with real estate, one big thing we're seeing is fractionalization and larger access to and sort of democratizing the access of infrastructure and real estate itself. A lot of big projects are, now becoming accessible for the retail investors. And a lot of those platforms, are doing super, super well. So we're seeing that. In terms of real estate itself as an asset class, we don't focus significantly on it. I mean, we have houses across LA, Delaware, New York, London, Birmingham, Liverpool, Mumbai, Delhi, like so on and so forth. But that's just, good real estate. It would be good to buy. We can spend some time on it. It'll grow, so we'll buy it. But we're not developers. We don't have expertise on the development side, nor do we care to get into that sort of subsector at this very moment. But prop tech fractionalization is definitely on the rise as well. And then the final one, I would say, we're seeing a lot of investments in is actually healthcare, and specifically on regenerative health, wellness, longevity, these kind of areas. There's a lot of investment going into that. From the Asian side in particular. I met a couple of Chinese family office. I mean, they go back, eons, on their medical practices and the Chinese medicine, right? And same with India, there's the stuff of Ayurveda, right? Which is the old Vedic ways of doing things. Scientists are now discovering actually these guys knew the right things 1,000 years ago,
Yes,
right? And
exactly.
their own exactly, and they only now have the tech to validate it. So a lot of that is coming back and being implemented into the Western world. So we're seeing a lot into that as well.
That's funny, Anmol, because sometimes I look at food tech investment opportunities and I see some stuff which my mom was always cooking all the time, and then they call it like the new power or superfood and so on. I'm like, so my mom was cooking every day because we
Yeah,
have
yeah,
vegetarian.
exactly.
Can I ask you both whether, just to go back to something Anmol says with his analogy with the early days of the internet startups, no one, I like to ask you both, Leah and you, Anmol, this, no one can conceivably dispute the fact that AI is going to have the same sort of impact upon the world that the internet. I'm so old. I remember the era pre the internet existing. You probably none of you probably do, but I remember. The days when I remember days when faxes were new. They were very exciting when they first came in. So no one doubts AI is of probably a similar, if not a greater quantity than the internet and so on and so forth. But and everybody's going to be using it and probably is already doing it. But back in the 1990s, there were a lot of internet startups that went bust. Huge number of them, and a few firms consolidated, and the rest is history. Is the same thing happening in AI? I'd be very interested in both your points of view on that.
Yeah, I think look, whenever there's a trend, right, the market overheats and then there's adjustment, right? That's the basic principle of supply and demand. I think we have over supply of AI companies right now, and you're seeing this because a lot of startups are now applying AI where AI doesn't need, right? So I got pitched this company. I'm not going to say the name, but I'm just going to describe it. It's called Water AI. And I was like, what? And they said basically we use AI to figure out which type of or which sort of acidity or alkalineness in the water is preferable to you or is good for you dependent on your mood. And I was like, this makes no sense. Why would you integrate AI into something like that? Water is water, just drink it. We're seeing people finding solutions for problems which don't exist, right? And if we go back to the dot-com crash on 99, 2000, 2001, we look at the biggest example, for example, being Amazon. If we adjust the share price, even till today, Amazon is not where it was in 99. Does that mean Amazon doesn't have value? I mean, of course not. It's a $3 trillion company. So I think there will be adjustment into the market, right? There will be a downturn which will clear out these players who are unnecessarily there and just building on the hype trains, and people are, new term being, vibe investing. So it will definitely clear that out. But I think that presents a very strong opportunity to buy, right? So we are holding a little bit of cash, and we go back to the ways of Warren Buffett's thesis of be sharkish, when everyone is being bearish, and vice versa, be bearish when everyone is being sharkish. When there's blood on the streets, I need to be careful. So now that everyone is going all in and doubling down on Nvidia and Palantir and all that kind of stuff, we've taken our profits, right? And we're waiting. We might miss the next 15-20%, but we're happy. We came in very early on. We made nice double-digit multiples on all these companies, and now we are seeing the market is overheated. So we're going to let it settle. And there's going to be those companies who are foundationally very, very strong. And you just need to have the knack of analyzing that, right? And again, it goes back to being able to analyze the fundamental of a business, right? The cash flow, the trades, the go-to-market structure, the transparency, everything that me and Leah touched upon. And then the second part of it, the team, right? Do they have what it takes? Have they been in the market? Have they seen any peaks and troughs before? And if the company is fundamentally strong, the solution, the applicability of what they're building, there's a severe need for it, of course it will do well. It might go down, but for example, a venture as a vast asset class, a 10-year horizon, right? So it might go down for the first 2, 3, 4 years, but after that, it will eventually come up, given that it's fundamentally strong and doing the job what it needs to. So we're not really worried. We're actually very looking forward to the market going down so we can buy the same amount of amazing companies, but at a much more discounted rate.
Right. And Leah, what's your view on the AI potential bubble and where?
Once there is a bubble, of course, it is not avoidable. In fact, we are looking at the reshuffling of the industry, of the players. After all, it is about if it makes sense in terms of addressable market, if there is a solution which really solve a problem in terms of within the significant customer base, and then if it is scalable, and if there's a competitive advantage, if the numbers make sense. So it is just a a natural phase of growth of a industry in a particular sector.
Thanks, Leah. Well, Simon, first and foremost, you should read my book. Then you would answer the question all by yourself. It's out now.
I knew you'd be getting that in somehow. I was trying to give you the opportunity. When you brought up real estate, I knew that was coming.
I'm going to go to Oxford tomorrow, so I'm going to bring a sample of my book. Well, there's a lot of information which I studied at Oxford about AI winters and AI summers. And Anmol, you were just spot on. We had the same thought process on that. During the dot-com bubble, a lot of companies went bust, but a few companies survived. And then after that dot-com bubble, a few amazing companies were started. And you can look at this from a macro point of view and then also from a micro point of view. For example, Amazon survived because they got some fundings in, and now there are big companies. Google started a few years later, Airbnb started a few years later, Facebook started a few years later. But they also had competitors. Google had Yahoo, for example, as a competitor. Facebook had MySpace as a competitor. Airbnb had Couchsurfing as a competitor. If you look into the micro level, you have to be sometimes also lucky that you invest into the right company. AI is going to change the world, but it's, as Anmol already mentioned, it's a day-to-day thing. Even like a grandma who's 80 years old is using artificial intelligence. And what is artificial intelligence? It is a combination of machine learning, deep learning, and in a nutshell, predictions. We are predicting certain words, or we're predicting certain outcomes, and you can basically predict everything. And that's why it looks like a new machine or artificial general intelligence, even though it's not artificial general intelligence, it's still artificial narrow intelligence where we are. A lot of companies are trying to hype it in order to raise more capital, but the reality is it's just the next phase of software development and of machine learning, and in a nutshell, it's calculation. So there will be a consolidation in the market. A lot of companies will go bankrupt who do not have a foundation, who just say, we are using AI. And AI is something which you have to use in order to be much faster than your competitors. But interesting times are coming. I hope it's not going to be an AI winter, which we had in the 1970s and later again. I hope things are going to move forward, and people are going to have easier and better lives by using the latest technology, which is reducing the workload for them.
Okay. We're kind of running out of time, perhaps to finish and just on a sort of big, broad canvas to get your final comments. Maybe start with you, Leah. If you where do you, in terms of what you do, what might change? We've just been talking about AI. What do you think in terms of family offices and in investing world in general? What changes do you anticipate, if any, in terms of the way you go about your business over the next couple of years?
Well, we are very open towards new technology. We are very open towards AI development. We would welcome opportunities which are coming to us, and then make a sound decision. So we are very much positive about this new development, because it will truly transform a lot of industries in a good way. Of course, there are sustainable development, or there are just a hype. So time will tell. Thank you.
Are you, Leah, looking for investment opportunities more out of Asia because you have some Asian heritage, or are you looking also for European and American investment opportunities?
Yes, it's European and American investment opportunities can be a way of diversifying the geographic focus and more robust, more long-term approach. So it will be global.
What about you? Are you, Anmol, you mentioned this already, that it has to be an ecosystem out of South Asia. Is that your target, or are you open to invest into the States and Europe as well?
Yeah, no, look, we are very heavily invested in UK, US already. I think about 70 or percent of our portfolio speaking on the private side. The public side is pretty much all India at this point. On the private side, I would say 65 to 70% is Western Europe and North American market. We will divest that down to around 50% over the next couple of years, and we want to start investing more and more into emerging markets like India, China, and we're also seeing some stuff out of LATAM, so we might dip our toes into that market. But I think, given the recent relationships with US and India and US and China, I think it makes a little bit more sense to start focusing on the homeland economies where we have a stronger base and network. Also, with the strengthening of BRICS, I think that's going to present a massive opportunity. And we are already being asked by a multitude of our European and US families of how do we enter India, right? Because they know we have the back access, we have everything enabled there. So we want to double down on that. And again, it goes back to opportunities, right? And we want to capitalize on the trends that we are seeing.
Great. Well, thank you, everyone. Enormous amount for that. God, what a huge amount of different topics have been covered today. So time has flashed by as it always does. Leah, Anmol, Lawin, thank you very much indeed. So let me finish this recording now and hopefully see you the next time. Hang